Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. Before we get started this week, just a quick heads up that the Techstars Web3 Accelerator is now open for applications for the class of 2024. Jump on over to techstars.com/accelerators/Web3 to share with your Web3 founder friends or to apply directly. This week, Pet Berisha from Sporting Crypto joins me as a guest co-host. Sporting Crypto is the number one Web3 sports business exploring the intersection alongside 3,000 plus subscribers from the biggest sports and crypto brands in the world. The newsletter is read by leaders from Meta, the EPL, Candy Digital, NBA, La Liga, MLB, SoRare, and many more. Sporting Crypto is also multimedia with a podcast interviewing 15 industry leaders at the intersection, and they also host industry-leading events on a regular basis. Finally, Sporting Crypto are also an advisory and consultancy service that has worked with Adidas, Infront Sport, Copa 90, Universal Music, Flannels, Karate Combat, W3FC, and more. In this episode, Pet and I dive into whether or not the Sam Bankman-Fried trial actually matters, without digging into all the gory details on what's going on right now. And we also look at the state of crypto fundraising through the lens of Messari's reported the same name for Q3 2023. Then we get into the latest news on Web3 gaming with a story of how one game from the team behind the massively multiplayer online role-playing game Star Atlas drove transaction volumes on the Solana blockchain to unexpected levels. All right here on Money Never Sleeps. Pet Berisha, this has been a long time coming.
Apparently so, yeah. I mean, 234 episodes, right? And just about got the call up.
You are the Magic 234, but this goes way back, like 2017, back when it was those other two podcasts that we were working on. You as a producer, me on a humble guest type role. But look at us now, 6 years later.
6 years, it's been a long time. And actually, 234 is the bus that used to go by my flat where I grew up when I was younger. So maybe it's destiny.
Very good. No, this was meant to happen. And I'll tell you something else. I don't know whether it was on your LinkedIn profile or on your Twitter profile, but you have your birthday up there.
Yes.
You do.
Maybe?
You do. It's May 15th.
It is, yeah.
Yeah, because I'm May 14th.
Oh.
And so is my wife.
Wow.
And my Uncle Pete is May 15th.
Oh my God, that's so weird. I actually technically was born on May 14th.
Oh, really?
So I was born at midnight. And my mum, to this day, will still send me a text on the 14th, be like, I was in labor with you today. And they were like looking at the clock to sign as it turned to midnight. And they wrote it down as the 15th. But 15th, same as Andy Murray.
All right. Well, listen, Sporting Crypto, before we get started and dig through these stories that you and I are going to talk to, tell us a bit about Sporting Crypto, yeah?
Sure. So Sporting Crypto essentially looks at the intersection of sport and Web3. And it's primarily from a business to business perspective. So what I mean by that is we're not looking at the intricacies of when Top Shot release a new pack or when SoRare adjust their game rules or something like that. We more look at the kind of macro lens, like where the space is heading. And so we pick out every week a major headline within this intersection and go deep on it within my weekly newsletter that goes out every Monday that is subscribed to by over 3,000 people from some of the biggest sports rights holders on the planet. Kind of accidentally stumbled into the B2B thing. I had started writing it because in the last hype cycle, at the peak of that, I was probably having about 30 inbound calls a week. And 80% of them were, in retrospect, really useless, but they taught me a lot because they helped me build my own thesis on where I think there might be value here from a kind of sports entertainment perspective and where I think there's a few red herrings or whether there is a bit too much hype in specific angles. And so I started writing it down because I was like, there's just too much here. My brain is actually overloaded with stuff that's being pitched my way, either from crypto guys wanting to buy sports teams or sports people that are about to sign a crypto sponsorship and asking me whether or not it's a good idea. In retrospect, I don't know whether or not my advice at the time was much good. But writing this down every week, I started, again, forming my own ideas and thoughts and, yeah, just snowballed. We started in September 2021. got to about 200 subscribers by the end of that year, then had about 1,000 by the end of Q1 2022, 2,000 by the end of 2022, and then we hit 3,000 a couple of months ago. We've got some of the biggest brands globally reading at the exec level. We also spun out a podcast that is on episode 6 now, where we've interviewed some big people in the sports industry who have kind of Web3 titles or are working on Web3 stuff internally. And then we throw a bunch of events as well across mainly New York and London, which is fun. And on top of that, I do a bunch of speaking at conferences, advisory, consultancy stuff as well, which is all good fun.
Awesome. You got a couple events coming up too, yeah?
We do, yeah. London, 25th of October. We've had about 100 RSVPs for that event with a space that probably holds 50 to 75. So hopefully not everyone turns up, but obviously welcoming any more people to RSVP to that. And we have probably our biggest event of the year in November the 16th in New York at the Raleigh Road Museum, which looks like an amazing space. We've already had about 40 to 45 RSVPs for that. We expect to have about a couple of hundred with maybe 125 to 150 people in the room.
That's great. Well, it's a great community. I love Sporting Crypto. It's not only a cool name, but because of my whole role in this space, investing in Web3, when I pulled together this thesis, like I couldn't not invest in sports, but had I ever invested in sports startups before? No, right? So I kind of look at this from the perspective of, I'm such a passionate sports fan. There's a great network within Techstars, guys like Jordan Flegel, who have been investing in this space for a long time and can rely on him to help kick the tires for investments, but also reading Sporting Crypto each week helps to inform me and keep me up to date with what's going on. So thank you.
My pleasure. It's great to hear feedback like that, honestly. It's weird that sometimes I interact with readers and people consuming the content like very often, and there's others that I don't that often. But you can see it in the stats that there are people who maybe you've never spoken to before, but they are reading it not once every week, but like multiple times a week, and they're sharing it internally or externally. Yeah, that's always really great. If it's worth sharing, then it's worth writing, right?
Oh yeah, one of the founders I invested in, Greg Hannum from PureCat. What he's done is he's taken your first episode of your podcast with Mark Epps, and he's using it as a piece of his market validation because Mark said something specifically that totally identifies with their thesis on where they're going as a business. And so that's now going into a data room as a piece of market research. So yeah, making things happen. So thank you, Pat. But listen, let's dig in because we got a few things that I wanted to go through this week. And I know that you came up with a couple of things as well. And it's hard not to when you've got all that content from your newsletter. And I picked out a couple of things there as well that I wanted to mention. But the first thing, and I think we're going to get into some content here that perhaps predates your original birthday. And so going back to the 90s. So on that point, we've got the Sam Bankman-Fried trial going on. And I'm just already sick of it. Okay. In that I don't think this is going to make a whole heck of a lot of difference. Crypto, the things that people were saying a year ago in terms of, hey, we had all taken a bath on crypto and then SBF comes along and poops in the tub and he gets up and he leaves it there. And that's effectively what he did. Now we've moved on. It's nearly a year later. We kind of want to put this
It's basically a year later, right? It's going to come up to just about to be 12 months, I believe. Yeah. I think beginning of November. I do find it fascinating that this is still, if you go on CoinDesk or Decrypt or any of the leading crypto publications, you will see that the most viewed, most clicked on articles are all still about SBF. There's books being written, there's documentaries. I do understand it was such a monumental seismic event and case of alleged fraud.
Yes.
That need to be careful how you speak about these things, obviously, when there's a trial ongoing.
The word alleged.
Alleged saves you from most things. I think I saw the head of compliance at Messari write a piece for one of the big crypto pubs where they said crypto needs to detach itself from SBF. And I think that's true, but I think that's also impossible at the same time because this has to be the last time a big hack or big event like this happens where hundreds of millions, billions of dollars are lost in the ether. I don't know if crypto can deal with another FTX Luna style implosion. And now I say that there probably will be another one and crypto will probably still be alive. But in terms of most people know about crypto, whether or not they know the intricacies of what it is, how it works, they know about it. And I think now that we are at that level of everyone having some sort of awareness of these tokens underlined by kind of a nascent technology, it's more and more difficult to like brush under the rug some of these seismic events, because you're like, oh, stop looking at all the scam stuff over here because there's really interesting stuff happening at the other end. At some point, the scam stuff has to start becoming like 10% of what's going on here rather than 30 or 40, whatever it might be. In the same way that we see it with anything digital or website based or phone based, right? Like SIM swaps, digital banking fraud, identity fraud, etc. These things are always going to be around. But in crypto, scams and fraud, they're more prevalent because when there is nascent tech and there's this kind of transactional element where you can lose everything in one click, there's obviously going to be more. Like it just logically makes sense that there's going to be more fraud than there is in like usual internet. So yeah, I am bored of it. I think the one good thing that's come of it is probably some pretty interesting, not that I agree with all of them, but regulations that have started to seem a bit more sensible, at least here in Europe. With MiCA, I know that the FCA have just launched some new bits of regs on the 8th of October, 3 days ago as well. Obviously, the US is going through quite a public battle. But I think that the only good thing that's come of it is the speeding up of regulations that are needed if this is going to go anywhere.
Yeah. I had been equating what's going on right now to the O.J. Simpson trial back in the 90s. And we're only a week in, but it will continue. It will go for a while. It will be car crash TV. It may even get people on different sides of the fence, perhaps, like it did with O.J., where my grandmother and my great aunt Wanda were fighting, literally fighting over the fact that one of them, I forget who, was in support of O.J., and the other one was in support of the prosecution, or Judge Ito. She was more of a fan of Judge Ito, right? So things may end up going down that path, but like I said, it's nearly a year on. I think, is this outcome really going to matter all that much? Sam will likely go to jail, but there's been chatter in the last couple of days that the way the judge is doing things, that someone even said this could be a mistrial because of the way that the judge is treating the defense. And that's just an early whisper, but what if he goes free? What's that going to mean?
I think that would be quite damaging, right? Like,
it would.
I think if you are able to allegedly or publicly cozy up to US government officials, if you are able to plaster your name on some of the biggest sports inventory on the planet and partner with some of the biggest athletes on the planet, if you are able to raise funds from every biggest legitimate venture capitalist fund on the planet, a situation where you have millions of users are literally printing money and then lose all of those customers' funds.
Yeah.
And then get set free, again, allegedly,
Right.
lose all those customers' funds and then get set free. I do think it will, again, a lot of the detractors on the crypto front will just say, yeah, of course he gets set free, right? This is just what happens in crypto. And I think from an optics perspective, that would be damaging.
Yeah. All guns blazing here to send him to jail for only 100 years, though. I think he'll be fine after that. But I think, like you said, Pat, the regulation that's come out of this, obviously the push for MiCA in Europe predated everything that happened with FTX. That came from Facebook and Libra and their stablecoin from quite a few years ago that had been pushed forward, and the European regulatory troops, parliamentary troops rallied to say, we've got to put something up that will stop this from happening. And then with what's been going on in the US now has really been escalated by what's happened with FTX. And I don't know if anything's going to come through on the US side, because that's just locked in so much of a political bipartisan divide there that's really messed up that country. But it's hopefully we do get something that comes out of the US. Singapore is doing well. Hong Kong is doing well. The US just needs to get its act together on that side.
Yeah, you mentioned Libra. I always say that was actually quite a good idea if it was proposed by anyone but Facebook.
Exactly. Yeah, I know.
Which is quite funny. And it's really interesting that like Circle pivoted their business not too far from that Libra inflection point and have since then gone on to do incredibly well, right? So that's really interesting. I do think from a regulatory perspective, there was a CMS report today that came out about sports media and culture and crypto assets within it. And it was a bit of a mess, to be honest with you. The FCA regulations, I think, are pretty good. They're pretty strict on advertising, referrals, how you can position crypto assets to consumers, which I think is super good. Like I think at this point where volatility is still high and people can just lose money, and in a situation where some of these crypto assets can quite easily go to zero depending on how big they are, how popular they are, I think that's pretty good. I think Mica's really positive. I think although it doesn't encompass everything you'd want it to encompass, I think it's a step in the right direction.
It will.
It will.
Eventually
It will
That's
eventually
what
be.
European regulations is NFTs will come into the mix somehow.
Exactly. And actually my frustration was that they weren't in the first place, just because they have been the biggest consumer facing thing, like to come out of crypto since tokens or ICOs in 2018.
Yep.
And then obviously, like you mentioned, Singapore, Hong Kong, Japan has been pretty progressive and good for a long time. Even whispers of China, white papers, etc. And then, European countries, specifically Berlin, Lisbon, Barcelona, and a few other cities in Europe are becoming crypto hubs to some extent. I know Rishi Sunak is keen to do similar in the UK and London, whether or not it happens, considering kind of political situation here. And I think maybe that we're quite far behind as the UK from a expertise perspective in government, in tech. That might slow us down compared to our European counterparts, and then Mica more generally.
Yeah. All of this is having an impact on the funding situation. And still these toxic impressions that different venture capital firms or angels have around this space, coming from what happened with FTX, even though it was a year ago, but what they'll refer to as uncertainty around regulation and where are things going. I know quasi-VC investors that still wouldn't touch anything before they get their regulatory license, even if that regulatory license is still not live yet, right? And then even investors that I've reached out to that should be quite friendly, that I said, listen, hey, just want to have an intro call with you to tell you about what I'm working on, to tell you about this latest group of companies I've invested in, and to see if we might be able to share some deal flow. And I just was looking forward to having an intro chat with this individual. And the response was, sorry, don't invest in Web3. I'm like, okay, that's fine. Thank you for everything you've done for me, but I guess I will try to get back in touch with you in another couple of years. But we went through this huge effort in May and June of this year to reach out to investors that we knew in New York City that invest in Web3, because we brought the whole Techstars cohort over for the final investor dinner that we did back in June. And like the New York City event you were telling me about in July before we went on AirPet that you had, we've got, we had 25 investors turn up at the end of June for this dinner. So that was pretty good going. And we got them there. And that's what I'm overwhelmingly seeing is just the interest, the investor interest still there from specific Web3 investors in the US. Once you get outside the US though, it's tumbleweeds.
I totally agree. I mean, speaking from a personal perspective, it's not investment, but we have found sponsorship for our events and newsletters a lot easier to come by. And the conversations are a lot more progressive with the States than it is companies in Europe. I think that's for a plethora of reasons. On the investor front, I do think that some of the valuations just got absolutely insane in this last cycle. And I think that a lot of the companies that had a ton of capital deploy were stuck between a rock and a hard place. Either sit in a situation where rates are low and you're not deploying and your LPs are getting pissed off, or deploy at valuations that you're not comfortable with. And I think many went for the latter approach because their colleagues were doing so in the industry. And I think the other reason is some companies that did their seeds or Series A's in this last cycle are now stuck in the mud because they either have to take a bridge round on, they have to take a big hit in valuation and try and rebuild, or they tumbleweed. That's what I'm seeing really from a lot of the early stage, like seed A, all the way up to prepping for Series B companies. I also think that investors themselves, with the rates how they are, like, you know better than me, but deals have to be really good for you to park a lot of cash into things that are potentially going to yield a big return. Because if you make an angel investment of, I don't know, $50,000 and you think that might 100x, because that's what you should do with every angel check or whatever.
Yeah.
I've not made many angel investments, so.
Yeah, no, that's what you're looking for.
Yeah.
Every check you write needs to be 100x.
Exactly, right? And so if you're thinking about that 100x over 10 years, if rates are currently at 6-7%, you start doing the mental maths in your head, whereby if you park 50 grand in a cash fund over the next 10 years, what is that compared to? And then suddenly the risk isn't 100x, it's 10x over those 10 years or whatever, at your upside versus your downside, considering the rate. I think on the plus side, it's meant that, again, I don't like this analogy, but cutting the wheat from the chaff, in the sense that only the best survived. Unless your idea is extremely good or already cash flow positive, it's going to be tough. It's going to be really tough. And like a lot of people are predicting, the end of this year, beginning of next year, I think is maybe where the market turns. I still think there's a little bit to shake out. It still feels like mid to late next year is when we might see some green shoots, and beginning of 25 start to see some of the startups we're seeing now have a big impact on the industry. But I still think there is a bit of sideways to go for a while.
There is, yeah. I was talking to a Web3 investor this morning who was talking about getting excited again about Bitcoin and the upcoming halvening, which, for those that don't know, is where the Bitcoin mining reward is cut in half. And that has, over the last 2 bull runs, been the signal of the return of a bull run. And that he was pointing to that, and he was on such a roll, giving me such wonderful insights about things, that I didn't want to cut him off, and I just let him keep going on it. But yeah, I think that I don't think the upcoming halvening in April of 2024 is going to be a big signal yet. I think we still, there's a lot more to shake out.
And look, it's either a self-fulfilling prophecy, or it's never, like, we've never seen crypto when macro is in the mud, as the kids say. Like, we've never seen how crypto markets react when the macro is really weak, when rates are this high. So I don't know. It's going to be interesting to see how the markets react on the halvening, any other like big network upgrades to Ethereum, any other big deals that some of these other layer ones have with big institutions. ETFs are another big, like, I'm very interested to see how some of these trigger points impact the crypto market.
Oh, there's tons. And this was what got me thinking about this, Pet, was Messari did their State of Crypto fundraising report for Q3. And the headline number was that the quarterly fundraising is down to the lowest level, which is 2.1 billion in 297 deals since Q4 of 2020, which was before we started going on this run. And there's so many things that go into this. And it's not just where valuations are depressed and crypto, and in terms of, say, the 2 headlines in terms of Bitcoin and ETH are down 60% off their highs. This is that, like you said, it's the macro side. It's the macro picture. Those investors that were investing, institutional investors that would, say, drop 100 million at a time into their strategy, that, say, 10% of that was going to venture capital as part of their overall investment strategy. Now it might be down to 5% or 4% or 3%, just because of the way that treasury yields are right now, and that they can earn more on that. And so they're less risk averse. They know that the startup community in general is going through a cash crunch, and that it's difficult to get early stage companies to the next level. That being said, One big positive coming out of this report, for me at least, for the companies that I'm investing in through Techstars, was that VCs seem to be going earlier for what's called asymmetric returns, like the 100x, where you invest at pre-seed, where you're getting in at a lower valuation for your money rather than investing at seed, Series A, Series B. And so that was helpful to hear, but that means they're going to be going through things with a lot bigger, probably a lot more finer of a fine-tooth comb in
Oh,
order to find the good deals.
I think the terms are also a lot more aggressive. I've spoken to some companies who, as I said, are just in a position where they either take the money and water down the entire founding team's positions, or the VC or the PE company coming in are taking such a big position that it kind of risks the governance of the board, stuff like that, where it really is do or die stuff. And I do feel for them. At the same time, I think if you build a business that is completely predicated on the whims of the market going up and down, I think that's kind of what happens, right?
It is. It is. And where I do get still the positive and why we're still going to recruit and invest in 12 companies in March of 2024 is that the majority of companies that I'm looking at right now are those that after they go through my program will be raising a pre-seed round. And so putting together 700K, 800K, $1 million in their pre-seed round and being able to do that through a couple of micro VCs, a number of angels, that proposition is easier. That being said, the numbers they need to get to, the metrics, are more difficult. So you want to raise a seed round, you're looking at 30K, 50K monthly recurring revenue at minimum. You want to do a pre-seed round, you need to show that you've got some revenue in. Now, when it's pure crypto native, where they are building something that is truly decentralized, I've been talking to VCs about this as well, and that pre-seed, seed to Series A has nothing to do with revenue. It's just that's the order of what they call the rounds. So we just invested in pre-seed in the first round, seed in the second round, and Series A in the third round. No revenue, but we're comfortable with the technology progress that these projects have made over the course of the last X number of years. And so, and it's hard to even call it revenue because what's actually happening is that the value of what they're building is accruing to a token. So it's a different story. It's just finding those right investors that that, hey, they're looking at this project, they're looking at your startup and saying, I wish I had the guts to do that myself, because that's exactly what I would have done.
I genuinely think that a lot of companies went token heavy, token crazy in the last cycle as well, like token for token's sake. And as soon as you open yourselves up to that risk and that volatility and that kind of open market side of things, and I think a lot of VCs did pressure some of these startups to go for tokens from an unlock perspective. They're a lot easier, quicker, more liquid, and VCs and funds and angels can get returns quite quickly. I just don't think it's the right way for 90% of crypto startups to operate. I really don't think so. And I think a lot of them still that have tokens now, it's difficult for them to answer why they have them. And I think that's a real problem, that kind of token for token's sake mania that happened between, I guess, 2017 to 2022 is most certainly going to quell, and it has started to do so already.
Yeah. I mean, we push back on that significantly. If you're a centralized company and you're bringing a token to market, you better have a pretty damn good idea why. And I've had conversations with founders that kind of start out, hey, so tell me about the token. Well, if the user holds the tokens, they get a discount on the services on the platform. I'm like, oh, okay, why do you do that? Why don't you just do it without a token? It'll be a lot easier. You won't have to deal with market makers. We need a token. We're Web3. Okay, why don't you just, are there any other ways to do this? Well, we couldn't raise money via equity. I'm like, okay, listen. So we're not going to invest in that company. Now, folks have been challenging me on this recently. And if you are a centralized company and you bring a token to market, take gaming and take a gaming ecosystem being built, and where you've got a number of titles, a number of gaming titles that are being brought together under one roof, and that the economy really to be able to onboard and offboard value into this gaming ecosystem, it's token based. And so while it is a centralized company, it's that in order to operate and move freely around this gaming ecosystem, you need to have the token.
I think that you should be pushing back and saying that is the best example of how not to have a token as a centralized company. And I'll explain.
Tell me
So
more.
I think and I've actually had this conversation with a game before where they were like, we're going to launch a token. And I was like, why? And they were like, again, like you, because Web3. And I was like, yeah, but if you have the token out there, then anyone can trade that token. It's out in the open. You lose control. Anyone can trade that token. And if poor Pete is playing this game and he's accruing these tokens, and all of a sudden Pet comes over and nukes the crap out of that token because he's trading a big stack of it, Pete's done nothing wrong. And suddenly his tokens are worth like 60% less. Like, why? That makes no sense. Like, no sense. And nobody has ever given a good counter to that. And as long as that's true, I think that crypto in gaming, as in tokenized economies in gaming, will be quite neat. I think they will see fleeting mainstreamism, but like gaming economies without tokens are hard to manage. Add tokens that are 24/7 tradable by people that don't even play the game. What is the likelihood that someone's going to solve that?
Well, the thing that I like to do when I get to that part of the conversation is pull this in that, okay, yes, you can do that, but you can't use it for fundraising. You're like, oh, no, we need to use it for fundraising. Why do you need to use it for fundraising? We're Web3. And the investors just prefer that so that they can get that liquidity after a year or 18 months or whatever it is. Like, there we go. Okay, and then you have to deal with the market makers. You have to deal with the nightmares of keeping the price afloat of the tokens. There's some wonderful market makers out there. Don't get me wrong. It's that, do you really want to have to think about that? I love this quote from Sam Williams from Arweave, which is just, when you're an early stage founder, you just need to be able to filter the noise and focus the fundamentals. And when you're dealing with a token price, all this market heat, you don't need that. But listen, you found one that was quite interesting, Pat, in terms of showing the world over one day how a token-based game can actually create some volume here. Can you tell me what you found?
Yeah, so this was a game called Sage Labs by the folks who have created Star Atlas. And for those of you who don't know Star Atlas, it's a huge MMORPG that was invested in by a bunch of really big heavy hitters, built on Solana. I think they were invested in by FTX as well, and potentially, allegedly, lost some money on the exchange itself.
Okay.
They laid off about 73% of their staff in July, which was a big shock to many in the industry, but many were also saying, well, what did you expect? Games aren't easy to make, and if you're relying on market only going up, then you're not going to give yourself long enough to make the game. And there's one of the games that I'm paying attention to a lot is called Illuvium, which is, they sold $70 million worth of assets on Immutable, I think few months after the FTX crash. And they recently raised another 10 million to keep them trucking along, but they're building something really big as well. And I'm very curious to see how they do when they're out in the open. Very curious to see how Star Atlas do while they're out in the open. But in the meantime, the Star Atlas team created something called Sage Labs, as I mentioned, which was just like a simulated resource management game. You do different tasks and stuff. It's not like a 3D immersive experience. It's totally 2D. 16 million Solana transactions, 15% of daily Solana transactions, 2 million plus daily transactions, and 8,500 profiles created. So
It's a lot.
It's quite a lot. My hot take is the entirety of this game is on chain, and therefore every single thing you do is a transaction. And so how meaningful is some of that data, right? Is it impressive to have 2 million daily transactions when you moving a chair from X to Y is a transaction? Or should we just be impressed by 8,500 profiles created?
I think it's a mix of the two, right? Because if we know that true blockchain gaming is so transaction intensive, right? That let's look at what chain can support this. It's probably going to be the chain that can settle every, zero 0.4 seconds to be able to handle that many transactions in a game where every single thing you do needs to be tracked and needs to be authenticated through a transaction. And so I thought just the fact that the 2.2 million transactions on Solana over one day or over the weekend for Sage Labs game versus the 2 million on Polygon, that for every app that sits on top of Polygon and every usage of Polygon, that was very impressive. And it's just kind of a flash in the pan type thing that, yes, great. We see this, we recognize it. It's a sign of how we need this type of ecosystem to operate, but at a much higher volume, could you please remove the need to process a transaction when I move a chair?
Broadly speaking, Web3 gaming, I'm seeing a lot of interest, right? I think from publishers, from startups, from investors. I think what we have done in this cycle is we have seen a spectrum within where gaming and Web3 interact, which is what I mean by that is on one end of that spectrum, you have the Star Atlases, the Axie Infinities, the Illuviums that I mentioned, where it's built by a decentralized studio. There is a token. Everything in the game is NFT. A lot of the actions are on chain, all the way up to something like NFL Rivals by the folks over at Mythical Games, who have just released another racing game, actually, backed by deadmau, weirdly, the music artist. But they are very hot on the game has to be a game. And if we have NFTs in it that people can buy outside and use in the game, then that's like a bonus. And some of the numbers with NFL Rivals on some of these NFTs are pretty impressive. Tens of thousands of users, hundreds of thousands of dollars of volume, and they've had over 2 million downloads. And they were featured as an Apple Game of the Day on the App Store. There's that spectrum, right? I think towards the NFL Rivals side of things is where we're going to see the mainstreaming happen. I don't think that everything is an NFT. There's a token. There's multiple worlds. There's a economy totally on chain is going to be for everyone at any point. They may see fleeting mainstreaming, but I don't think it's going to be anything that's sustainable, at least in the short term. That could change in like 10 years.
Yeah, the short term is, what is it for me? I was talking to someone earlier about this, and that the reason that I stopped getting so excited about metaverse investments is that I realized that I would need to be investing in infrastructure that allows messages to be sent through fiber optic cables at twice the speed of light. And also I would need to be waiting for the mixed reality headset to come out at a much lower price point so that kids can afford that in the same way that they get a skateboard. And we're a long way from that.
As they say, if you're early, you're wrong, right?
Exactly. Or in Ready Player One, where if you couldn't afford it, it was a public service. You were given this metaverse terminal. Here you go. Go nuts. Now, again, that's science fiction. But I do agree on the view. And we take so many folks through this journey, Pet, as well, that if you want to sell Web3, you can't just sell it to other Web3 heads. You need to be able to sell it to Web2. And what sells to Web2 are the things that they recognize and the things that the world knows, like NFL, right? Like Nike, like Adidas. And those are the things that get people's attention and where they are willing to go through perhaps the extra hoops. And depending upon your generation and your technological capability, what may be a big hoop for you to jump through is just a little tiny stepping stone for somebody else.
And that is the shift that needs to come. We kind of saw it with, the whole GameStop thing. This can happen outside of crypto for sure, where speculative bubbles arise. And actually recently there's been this big euphoria around Friendtech, which I've actually purposely just ignored. I've read about it. I kind of understand how it works, but I just know it's a proposition that doesn't have any legs beyond, as you said, crypto heads.
Do you know who gave me my code, my welcome code for Friendtech?
Is it
the one and only Colin Platt?
I was going to say, if it's tradable, he'll be there.
Shout out to Colin Platt. And I played around with it. I messed around with it. I'm like, this is great. People are buying and selling me left, right, and center. It was fun.
Again, it's fun
to watch.
It's fun. It's great. But again, this is like a niche between a niche.
No, but it's a fact that it was built on Base,
Yeah.
right? And it's okay, let's see what gets built on Base. It was like in 2017, we got these things called ICOs. Those were built on Ethereum, okay? And it was one of the first wide applications of this thing called a DApp, distributed app. And 85% were frauds or failures. We do have to mess around with this stuff, and I'm not promoting frauds and I'm not promoting failures, but these things are going to happen, like you said, when you speculate around technology.
Yeah, 100%. I 100% agree.
Hopefully never in the case again, like you said, of Sam Bankman-Fried, allegedly.
Allegedly, I agree.
And what's going on with that trial. But listen, Pat, thank you so much for coming on to the show. I've absolutely loved talking through all this with you. Any burning last thoughts you wanted to share?
No, not really. I mean, the last thought is, look at the direction of travel, because nobody knows exactly where this thing's going.
Absolutely. And what's the best way for people to get in touch with you?
You can find me on sportingcrypto.com. You can follow the newsletter directly at sportingcrypto.substack.co.uk, I think. And then you can find me at Pet Berisha on Twitter and LinkedIn. Spending less time on X these days, I must profess. More on LinkedIn these days.
I gotcha. Same here. Cool. Thanks so much, Pat. That does it for this week, folks. Thanks to Pet Berisha from Sporting Crypto for joining me as guest co-host this week. And you can subscribe to and read Pet's fantastic Sporting Crypto newsletter on Substack, or just check out sportingcrypto.com. As always, show notes and links are also on our website, moneyneversleeps.ie. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify, as it helps others to find the show. Thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I lead the Techstars Web3 Accelerator. There are plenty of links in the show notes on moneyneversleeps.ie on how to get in touch, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!